Hi, welcome back to Patrick's Investments. And I thought I will be doing like a basics video today for all of you guys who are thinking about to start investing or the ones who just started investing, and to explain a few basics. Because in the forum, for example, on Trading 212, there's a social function where there's a forum on inside where people can ask questions, post stuff, which is really nice thing to have, especially unique in Europe, I would say. We don't have that in Germany or in Switzerland, so that one is a really cool thing. And a lot of people ask, okay, what is a dividend? When is next dividend coming? Do I get dividends if I have 0.2 of a share? And questions like this. So I thought we're gonna go through that, and we're gonna use our portfolio as an example, And well, let's just get into it. So if you find this interesting, please give a like and subscribe to the channel. That would help tremendous, as I'm trying to grow this channel. I have a German channel, which is around 2,000 subscribers. However, I would like to try to have an English-speaking channel and grow that one as well to basically reach more people. Yeah. All right. So here is our portfolio on Trading 212, which has now a little bit updated from last video. We got two new stocks inside. So we're currently at 15,297 francs, and we have a little bit of cash. So I explained Trading 212 as well at the same time. You see, this is the value of the portfolio. Then we have 52 Rappen, or 0.52 francs in free funds. And then you have basically the overview here. Now it's on Caterpillar, where we are holding 12.5 shares. You see we are 10.22% up, or 259 francs 96. Value is 2,800 francs. So you see the chart. You can go basically by day, by week, and so on. You see what we paid for it, 203 francs or $222 on average. What is the current share price? And then obviously you see it's changing. And maybe that's one of the first things that you have to learn. If you start investing, you have to get used to that it fluctuates. It means you buy something for, let's say, $100, £100 or whatever, and the moment you buy it, it can already go down 5%, it can go up 7%. I mean, not immediately, but within hours or days or weeks as well. Some stocks are very volatile. Volatile is a word for that it fluctuates, basically price goes up and down. And the more volatility you have, the more basically up and down you have in the stock price. So you can see that. Then you can set price alerts. For example, you would like to have a custom one. You click on the middle here, or you say, okay, I would like to see if it goes 5% up or 5% down, and so on and so on. Share lending info is when you lend your shares, which is possible for the UK and Switzerland as of now, and we are in December of 2023. Then you have some basics about the company itself, which is really good. How many employees? What's the market cap? 129.69 billion. Earnings per share, dividend yield at the moment 204%, and so on. Plus income statement, balance sheet, cash flow, and so on. So this is quite interesting. And so you have a ticker symbol, the ISIN number, which we use here. Well, and the minimum that you can trade, for example, if a stock is very expensive, you can buy now 0.01 shares of Caterpillar in this case. Then the history is when you buy something, you can see when you bought it and so on, and furthermore. Now, we have that for those stocks. You can see that we have now 12. We can sort it by highest or whatever. Here we have a visual allocation as well. You see we have 12 investments. Which one is the biggest? If we go now, let's see, into pies, which is something that's very used with the guys from the UK. And basically you can create your own little ETF, exchange traded fund. What an ETF is as well, maybe to go even more into basic, is a lot of shares combined into one fund, which is not actively managed, so you don't have the huge cost. And basically, instead of buying, for example, Apple and Microsoft, Nvidia and Amazon and Netflix and I don't know what they are called, you can buy an ETF where all of those might be inside. There's thousands of them. Usually very popular are the world ETFs, which is the MSCI World or the FTSE FTSE All World, where you have basically all those inside and you buy one share of that ETF and then you basically diversify. Diversified means that you can have basically the risk reduced by having more than 1 or 2 or 5 shares. Because obviously if you, for example, have €1,000, £1,000, you invest in 5 shares, each 200, and one of them goes bankrupt, which depends on the company, can be realistic, can be very unrealistic. you basically lose 20% of your investment, right? If you have an ETF where there is, for example, 500 inside, the S&P 500, Standard & Poor's 500, with the 500 biggest companies by market cap from the US, and one goes bust, it will be replaced with another one in the list that will be basically introduced every quarter. They determine that, and that will be basically taken out and replaced with another one in the line. And well, yeah, the risk would be spread through 500 companies. Obviously, there is a market cap as well. For example, Apple has like 3 trillion market cap, so there's more of Apple inside that S&P 500 ETF than there is, I don't know, Exxon, for example. I'm actually not quite sure if Exxon is there, but I'm just saying as an example. But your risk is spread. Yeah, so for the beginners, maybe an ETF would be a good idea to start to build a foundation of your portfolio, reach a certain size, and then maybe you go into stocks. So that would be the safer way. And from experience, my own experience, because we have a portfolio for us, we have 7 different portfolios we use. Trading 212 is one of them. Or brokerage, sorry. We have one for our daughter. My wife has a separate one as well. And my daughter's, or our daughter's one, is purely ETFs, 6 ETFs, and she's actually beating us at the moment. Without doing anything, because our daughter is 5 years old. Yeah? So sometimes the performance, not sometimes, actually most of the time, the performance of an ETF is better than if you do stock picking. Stock picking means you basically select different stocks and then you hope for the best. Another thing that I would say for beginners as well, stay away from penny stocks. Penny stocks are basically stocks that are valued where a share is less than $1. And usually the really, really bad penny stocks are 0.0005 of $1. And people always come and think, ooh, when I invest like $100, £100 into this stock and it goes to $1, I'm going to be a multimillionaire. No, you won't, because it will never happen. Yeah, these companies are so bad most of the times that you will lose those, that you will lose those 100 euro, pounds, whatever. So stay away from that. Look at stocks like Apple, Microsoft, the big ones, the blue chip stocks, or the dividend aristocrats, the dividend kings. A dividend aristocrat is a company that is paying dividends since 25 years and hasn't lowered the dividend in those 25 years. So minimum 25 years. A dividend king is a company that is paying consistent dividends since at least 50 years or more. Yeah, so basically they pay either the same dividend or they increase it over time as well. They cannot go down. If they reduce the dividend, they lose that title. What else? Stocks. Here we go. So pies. You can create your own pie. If you don't want to buy an ETF, you can create your own pie and basically put in like 10 shares or 10 stocks or 15 stocks and have it automatic. So you see here on top, auto invest. You can click that. And then basically once you have a pie, it will allocate according to the percentage you do. For example, if you have 10 stocks with each 10% and you buy something, for example, auto invest that you auto transfer 100 euro every month on the first, and then you want the auto invest to work that will basically buy on the first for 100 euro those stocks according to the percentage. So for example, if you say you want to have, let's say Coca-Cola as example, but you want 25% of Coca-Cola and the other ones share 75% basically, the other 9, then it will invest 25% of that 100 into Coca-Cola and spread the rest according to the percentages. This is a pretty cool feature. I have not seen that one anywhere else either. But coming back to the investments. Now, you can see there are some in the red, some in the green. Overall, we are, what are we? 758 francs in the plus, 5.23%. One thing I wanted to show you as well, because a lot of people ask in regards to dividends, one of the bigger investments I have is Gladstone Investment. I just yesterday purchased 18 shares more. Now we're at 160, and that will bring me approximately 10 euro net dividends per month from now on. Now, interesting thing is here you see the share price dropped. You see from $14.45 to $13.73, which is quite a lot, right? In just one day. Oh, sorry, 73. What happened is basically when you have a dividend X date, and these are terms as well you need to learn. You have a dividend X date and you have a dividend pay date. On the X date is the date where a company decides how much dividends will be paid, or that's actually fixed on that date. It's already communicated usually earlier than that, but on that day it's basically official. So yesterday was the X date for one of the dividends that will be paid on the 15th of December for Gladstone Investment gain. And it's going to be 88 US dollar cents gross. Yeah, so basically before taxes. And usually what happens, not usually, actually, what happens is on the day when there is the X date, the share price drops according to the amount that will be paid out as dividend. Yeah. So if you have, for example, a share that costs $100 and the dividend is $1, it would be a 1% dividend yield, right? So usually what happens is it's not guaranteed, it's always the same. You see here actually it's less than 88 cents, right? So what happens is that the share price drops, and because the dividend is taken out from the share price and then paid to the investors, right? As you can see, it already went up a little bit and came down again today. So this is what happens. You have to understand. So to receive a dividend, you need to have the share in your portfolio the day before the X date. So if your X date is, today is whatever, the 5th of December, if tomorrow is the X date and you buy it today, you are entitled for the next dividend pay date. Yeah. Basically, if tomorrow is the 6th, right? Tomorrow is the X date 6th. You buy it today, 10 shares, and the pay date is, for example, 30th of December. As long as you have it in your portfolio today, before tomorrow's X date, you will be entitled to receive the dividends for 10 shares that you bought today on the 30th of December. I hope that is clear. If you have questions, please put them below. I'll answer them. That's that. So we have the dividend, we have the X date, we have the pay date. Yeah. How can you find out which company is paying dividends? How can you find out when is the X date? When is the dividend pay date? I use a portfolio tool which is called Dividend, and obviously this is now our entire portfolio. This is just trading 212. As you can see, we're at 97,000 euro, and we are investing since 4.5 years. Well, basically, I'm investing for our family, for my wife and my daughter as well. And what you can do is, there's a cool feature called Dividend Calendar. As you can see here, we are going to receive 457.60 euro net dividends this month. Today, Johnson & Johnson 9.05 will come in. If you click on here, it will show you 10.65 euro gross. You see 9.69 shares times 0.099 minus 15% taxes. You can put that in the back. Basically, for each and every stock, it says pay date 5th of December, which is today. The X date was on 20th of November. So I had to have 9.69 shares on the 20th, basically on 19th, day before, to receive now this dividend. Yeah. This feature and some other features are the aristocrat functions. There is a free version of this software of Dividend where you don't have to pay anything. However, you will not be able to put in the taxes and see some of the features that I will show here. If you would like to have the full version, you'll find a link below with a discount code until end of the year, promo code 2023, and that will save you 10% of the annual subscription for that app here. Yeah, you can have it on the phone and on the computer, as you can see here. Now, as you can see as well, we have Gladstone Investment. We're going to get paid 97.94 euro net dividends, 141.83 shares I had, and I said I purchased yesterday another 18 shares, which are not coming towards us because it was on the X date when the share price dropped, so I got them a little bit cheaper, right? And then Gain or Let's Investment is paying another dividend, the regular one, at the end of the month, and you can see here I have 160 shares, so I'm gonna get paid for 160 because I bought them after the X date. This is a visual example of that. Now, if we go into the portfolio, you can see here the dividends, what we invested, or what it's basically worth. How much we invested, 84 or 85,000. We are 40% up. Dividend yield is 3.74% on the buy-in or 3.27 on the portfolio, but obviously this is more interesting. And these are the net dividends. You can't take out the net and put it in gross. However, if you are not aristocrat, you won't be able to toggle this. That will be on gross dividends. Then you see an overview here. You can see the entire portfolio, how much dividends we get this year so far. And you can see the percentage breakdown. Now, Mainstream Capital is the biggest one, 9.32%. Then comes Shell, Allianz, and so on. Then you can see here the breakdown over the month. Average 212.57 for this year. Yeah. However, if I put in that and we assume that we have now all the shares starting next year, The dividend forecast is 3,193 shares, or an average of 266.15 euro. However, we put this back. And then we have this matrix here. Where do we have it? You can see how much dividends we got from the different shares or stocks we have on that year. Yeah, you can sort it by the highest or the lowest. You can sort it by alphabetical order. You see, Mainstream Capital paid us this year 265.18 euro. Yeah, I really like these features and I love it. It gives you an overview, especially the calendar, and for people who would like to search for things as well. If you don't have anything yet and you want to find out, okay, who's paying? So you hear a name, let's say Coca-Cola, right? So you just type in Coca-Cola, you get in here, and it will show you the dividend yield, the annual payout. You can change your currency, for example, British pound, pound 46. You can look at the CAGR, basically dividend growth rate over whatever the last 3 years. It sees how the change. You see the graph here, the dividend in graph form, the yield, the quota, and the total return if you would have invested something. And you can even put in the price. You can say how much I invested on that day, right? For example, 1,000 euro, and it will calculate everything for you. I really like that. You can see here, compare it to another stock if you want to compare them. You can see when is the X date for those shares. So 16th of March 23, paid it was 3rd of April. It was paid out at 37 P. I think you call it P. And then how much it changed from the last dividend. Yeah. So if you want to compare the years, you can see that one and even more information. Yeah. And then you have similar securities or similar stocks. So I think this is a really great tool if you want to look it up. Again, this is available even if you don't have the paid account. So you can look it up for all securities, which is a really great feature. The calendar is great and all the overview as well. So that's pretty much it for the first one of the basic videos. If you have any more questions, please put them below. Give me a thumbs up and subscribe. That would help me a lot. And I'm as well on Trading 212 on the forum. If you have questions there, you can ask them there as well, and I'm happy to answer all your questions. So thank you very much for watching. I'll see you next time. Cheers. Bye.